This is hands down the easiest setup I trade, and I'm going to show you the entire thing start to finish in the next 20 minutes. I have been trading full-time on my own accounts for 5 years now, and I teach this one-to-one every single day, so I have seen firsthand what actually trips people up. Most of the time, it is not the strategy, it's that they buried themselves in 12 different rules and indicators that just end up canceling each other out. This setup is the opposite of that. By the end of this video, you will know exactly how I mark my highs, my lows, how I spot the breakouts, how I wait for the sweeps, and how I get into the trade with a clean entry. Grab a notepad if you want, but I promise you, it's simpler than whatever you're currently overcomplicating. Let's get into it. So this setup is called the break and sweep. So essentially we have a break of structure, a sweep of liquidity, and we catch a continuation in the original trend of the market. A lot of people overcomplicate trading. We do not need 12 indicators. We do not need to watch 3-hour videos over and over again. We need to keep it simple, structured, giving us an easy plan to follow to be able to repeat the same process over and over again. We're going to be going over how we are spotting our breaks, what we're looking for liquidity-wise, which areas we are entering, and then which areas we are targeting. If you are watching this, you should already know how to identify a break of structure, and you should already know what liquidity is. If you don't, it's going to make it way more complicated than it has to be. Quick thing before I keep going though, I coach a small number of traders one-to-one, and I've got a bit of room right now. If you rather have someone guide you through this rather than piece it together on YouTube by yourself and to here, there is a link below where you can book a call with me. All right, back to the charts. So number one, obviously we want to find the trend that we are trading in, and you guys might be looking at this thinking that we are in a bearish trend because we are seeing lower lows. But if we pay attention to this area right here, we do have a market structure shift, right? We have a new high that is created, a higher low, and a new high again. So in this scenario, we are now switching to bullish momentum, meaning we are looking for buys. This is super important. If we are not going with the direction of the trend, obviously we are trading against it, which is just going to end up taking us out. We also want to notice that we did inverse fair value gaps right around this area and have continued to reject them. This is giving us strong confirmation that price is wanting to move back to the upside. So in this case, we know that market is shifting. What are we looking for? We are looking for a break of structure, an area where, in this case, price breaks the last high with a solid candle, showing us that the trend is continuing upward. We have our break of structure. We want to make sure that we are also paying attention to when market does shift, because that will play a huge part in our result. So now we have our break of structure. What we are going to do next, super important, is draw an area from that break of structure to the last protected low. And you guys might be wondering why it is still here since we did wick out. We did not close below this low. Technically, this is our last protected low. This is just giving us a bit of guidance entry-wise on which area we are targeting to enter in, making sure that we do have liquidity formed within this area, and also some sort of confluence that will give us extra confirmation to enter a trade, right? So if we look at this area right here, we have our low, our high, our low, our new high. Liquidity is created here, breaking this area. Super important as well. We want to make sure that when we are marking out liquidity, it is valid liquidity where price broke even high. So now this is our liquidity area. What we are waiting for next is for this to be swept, which we see happens right here. But how do we even get a trade out of all this? We have our break. We have liquidity formed, market goes back up following the trend, our liquidity is swept. What else can we look for? In a scenario like this, we can look for fair value gaps, we can look for demand areas, we can look for order blocks, anything that is extra confirmation that the trade is willing to go your way. And as we see right here, we have a very strong bullish fair value gap here, which liquidity respected here. We also swept and still respected this area, starting to close outside of the zone. In this case, this would be that extra confirmation. This will not happen every single time. You might not always get this, but 9 times out of 10, you will have that extra confirmation. Now, what can we do? We simply wait for price to close back outside of our original target zone, right? Which is this box right here. We put our stop at the low of that area, and we are targeting other areas of interest. In this case, we are targeting this liquidity right here that has yet to be taken out, right? Now let's go on to a sell example. We have our break of structure, also considering that we also shifted structure in the market in this area. This is not a thing that will happen every time. You can catch this while trend is going. It just so happens that these are the two examples we have seen so far. So mark break structure. Where is our last protected high? Before the break of structure, this is our last protected high, so we can draw that area. We have liquidity that is very much created in this area, which we do end up sweeping. Huge engulfing candle right here. Super strong bearish candle right here, guys, right? What else can we look for? We have a fair value gap right here that is also being rejected, in which you can enter for a sell. Stop above that. aiming for other low area. And another thing that you guys can note in this scenario is that when you do have a fair value gap, an order block, whatever the case, that price is rejecting for extra confirmation, it is also valid to put the stop right above that area. That is what I usually do when you're a beginner and you're trying to focus on risk management and stuff like that. I always do suggest that we put it at the other side of the zone to give market wiggle room, just in case it's not the most solid entries. But in that case, just take note of that. When we are entering off of an extra confluence, stop can go right above or below that confluence, and it will give us what we need. All right, same idea right here, looking for a sell, right? What do we have? Our break of structure from, we are marking out our area from our break of structure and our last protected high. Concerning market goes like this. This is our last protected high. Now, what do we see? We see liquidity being formed, market sweeping that, and going back down. All right, let's get into some other. You guys might have also noticed I did not mention a specific time frame or pair, and that is simply because we can do this on any time frame and on any pair. Obviously, one time frame to the next will only make that the trade will be slower or quicker, but in the end does not matter. Let's look at the 15-minute time frame here. We are very much in an uptrend. We have our break right here. Now, where is our last protected low? It is all the way down here. We have many areas of liquidity created here, also swept. And what do we see? We are wicking off of a fair value gap, same as other scenarios, right? So as soon as market does close outside of that area, we can take an entry, stop below that fair value gap, and then we could target these highs. We could target other highs further in the market, right? So it's pretty freaking simple, guys. People just overcomplicate things a lot. They like to give themselves a hard time when it is just completely unnecessary, and it's just more harmful than anything. If we look at this as well on the 15-minute, right, we have our breaker structure right here with our last protected high, and what can we notice? We have a whole bunch of liquidity in these areas created, right? That is completely swept. Where are we tapping into? We are not necessarily tapping into a super specific area. Obviously, we have this candle here that is pretty high interest considering the size of this candle, but not necessarily, right? So what do? We wait for price to close outside of this area. Realistically, this would have been our candle entry right after the first sweep. In this case, stop loss would go at the top of that zone, and we can target areas of interest. We have an area of interest right here that we could have targeted. We could have went for these lows. Obviously, this would have hit break even, but it's just to show you guys that this can be done on any time frame, on any pair, at any time, really. Obviously, we know that not every setup will show up every single day. That is just trading. If it was that simple, I mean, we'd never run out of money. But these aren't cherry picked. I'm showing you guys real market example of where these things are happening. We can also see where things aren't happening. If we look at this, for example, we have a break. We have that area of interest where price does come into a fair value gap, sweeping this liquidity right here. But if we look at this case, right, once market does close outside of there, we would have our stop above here, and we hit stop loss. Right? You will not have a strategy that will have a 100% win rate every single time. It is impossible to find because, again, if that was the case, then we'd all be rich and there would be no challenge and it would be really, really boring. So that is just to show you guys how simple it can be. Step 1, break of structure. Step 2, mark out our area. Step 3, liquidity is swept. Step 4, does it tap into an area of interest giving me extra confirmation? Step 5, price closes outside of that area and we aim for other areas of interest. Recent lows, recent highs, recent fair value gaps on higher time frames. I really want you guys to rewatch this, look at the example. It's really, really hard to mess up, but like I said in the beginning, if you are not familiar with breaks of structures or liquidity, this is going to be very difficult for you. It is two simple concepts. It is repeatable. It is the same thing every single day. It is the same thing every single setup. Anyways, if you have made it this far, you are clearly serious about this, and I want to talk to you directly. Here's the deal. I take a small number of traders one-to-one, and I only work with a handful at a time, so everyone actually gets my full attention. This isn't signals, this isn't a course that you watch alone and end up forgetting about. I walk you through my exact trading model, we build a plan around you, and I stay until you can do it without me. That is the whole point. You leaving, being able to take your own trade, not needing me or needing anybody else. I can't take everyone and spots go quick, so if you're ready to stop guessing and actually get this hand, click the link below, book a call, and we'll figure out on the call whether it's a fit. That's it. Now let's finish. So quick recap, the 3 steps that you need for this are a break, a retest, and a continuation. Save this video, go test it out yourself, back test it, forward test it, and drop your questions in the comments. I do go through them when I have an hour or two that's free. That being said, I appreciate you being here, and as always, happy trading.